What's going on, you guys? Welcome to Risky Ryan Trades. Today we're going to do an earnings rundown of the week of, what is this week? August 4th. It's only Wednesday, but basically all the companies that I care about have reported, except for DoorDash, which we'll touch on still. But anyways, let's just get started because I got a lot to cover. HIMS got hit. So HIMS, according to Finfluential, put up an ugly quarter, missing on both revenue and EPS. Revenue's still growing really strongly, 73% year over year, but they did post their first retraction of revenue. So it's the first time revenue went down on a quarter over quarter basis. You can imagine that Wall Street and the retail community did not like that. It's in an important juncture at the moment. So their semaglutide business is kind of under threat. They never mentioned anything to that extent about the Novo Nordisk lawsuits, which, yes, there are Novo Nordisk lawsuits coming. No, HIMS was not mentioned in those lawsuits, but I did read a tweet today that explained that it could be that Novo Nordisk is trying to create some sort of legal precedent by suing smaller generic compounders of GLP-1s to set, if they win a suit against them, then it's going to be a lot easier when they bring a suit against HIMS. So basically, you have their earnings retracting, their revenue retracting, and then you have some major players, huge companies, with them in their crosshairs. So right now, we're going to enter a period of time. I actually reduced my HIMS. We're going to enter a period of time where there's going to be just this overhang, waiting for the other shoe to drop. So I've reduced and I've gotten very picky with where I want to add HIMS, and I'll show you where I would be picking up more shares. I want to see this stock come back down, and it is almost in there. Below this line right here, so below $52, I would probably add a little bit right here. I'd add again at 40, and then if it kept falling, I would probably add more, along this Gann angle. We could be weeks away from that. You may never get that, but that would basically tell me that we're not coming up to this line anytime soon, and we might be climbing this. I still believe in HIMS long term. I think that there are other opportunities other than GLP-1s. It's such a small market cap. I mean, it's only an $11 billion company, and the way that this thing, has been growing, which, now with this quarter, you have to wonder, but I think they have a lot of different opportunities. I think people are a little over-focused on the GLP-1s, and I hope that the CEO of HIMS is looking at other areas, other markets to grow revenue. So that's HIMS. I'm still long the name, but I trimmed and I added to other names, which we'll get to. AMD. Earnings per share was in line, revenue beat by 3%. No real surprises. They did guide, here, I'll get to that. This one's from Stock Market Nerd. He does a good job of kind of creating a summary here, but revenue guidance was a beat. So they missed EPS by a penny. So I guess, okay, so it's in line. So nothing really too surprising here. I think people had their hopes up with AMD. They were hoping for like a blowout guidance. But with the China situation, I think they were conservative on their guide. So AMD guided without China revenue because there's been some restrictions on selling chips to China. It looks like Trump wants to lift some of that. So we'll see how that goes. But if China sales come back, if Lisa's able to sell some AMD chips to China in a larger way, expect to see this. If you see that headline and you feel like you're short AMD, you got to hop in at that point. So long AMD, looks like we might get some opportunities to add because it is going, the price is dropping right now, not like precipitously or anything like that, but we did get up to, I think, like 175, 180 bucks a share. Last I checked, it was 160. So I'm looking here, I'll show you my AMD chart now. So yeah, we're at 165. So we're retesting this Fibonacci level. Point of control, you know, you got a volume shelf at 157, point of control is at 140. I have added shares up here because I just could not help myself. It's like, I don't want this to Palantir away from me like so many stocks do, because I believe in it long term. I think you're still going to get up to this Gann angle and just have incredible gains. But part of me does think that we get back to this point of control here at about 140. If I go to the linear scale, you see that there is like a linear Gann angle at about 153, 140. So if we get down here and I have a lot of gains in other stocks, which I sure do, and we'll be getting to that, I might rotate a little bit. You might see me rotate, go, okay, cool. Let's add a little bit to AMD. But right now, you know, I would love to see a little ABC correction. It's really overdue. The technicals are probably screaming. Let's just take a look at the, yeah, so like RSI is overbought. Stochastics, like for weeks, has been up there. And I'm sure if I go to the daily might even be troughing out, but like the RSI is coming down. So yeah, if you don't have any AMD and you want to get in, like nothing wrong with buying right here, you know, as long as you can hold on for a while. But I do think that, you know, we might get a shot. We might get a shot at like 143. At least I'm really hoping for it because I want more AMD. ZETA. Woo! Man. ZETA was the fattest freaking pitch, man. It really was the fattest pitch when it was sitting at, what was it sitting at, like 14 bucks? Unbelievable. $14. It beat by 14% on EPS. Revenue beat by 4%. Now this you got to read this. We're gonna go through every line of this. All right, delivered revenue of 308 million, an increase of 35% year over year. So they're growing 35% revenue year over year. They exceeded the midpoint of their guidance. So, you know, and they posted their 16th straight beat and raise quarter. So this is like a sleep easy. This could be my next SoFi, where it's just like the fundamentals are so good, everything's trending in the right direction. There's no good reason for it to be this cheap. Yeah, so I bought heavy before earnings, and then I saw a descending wedge. I'll show you that setup in just a second, but let's keep going over this. So free cash flow increase of 69% year over year. Nice. Net cash from operating activities increased 35% year over year. Net zero dilution. ZETA used 85. Okay, so ZETA had a buyback. So they're buying back their shares because they think it's so cheap. They used 85 million of their 100 million. And the board of directors just approved another 200 million stock repurchase program over the next 2 years. So they can't understand why their stock is so cheap. Instead of like diluting and issuing more shares, they're trying to buy up their shares. You love to see this. So everything trending in the right direction. It was up 25%. I want to show you this setup here. I want to show you the setup so you can learn from this, because as I was looking, just look at that gap up. It was funny. I was showing like it was still a buy at this point, and yeah, everybody realized that and kept buying it up. But take a look at this point of control. Here, I'm going to put this on the weekly. So, you know, I drew this back quite a ways, you know, back to about here when the move started. Very clearly, that point of control is about 1577, and the 1.272 fib, $16. It was pretty much, you had a volume shelf, a massive volume shelf right there. And it was kind of floating right around there. You also have this descending wedge that was forming from, actually here, I think this is linear. Here, let me go to logarithmic. There we go. You saw this descending wedge forming, and you knew that they were going to kill their earnings. And so I was like, you know what? All right, I believe in this company. I'm gonna add a little bit. And I want to show you what happened like during the earnings. So you see this descending wedge coming down. Earnings hit. Here, let's get in even more. Earnings hit right here. It hit, it came down, it retested, it popped back up, and that was it. That was all she wrote. After 45 minutes, you're like, okay, we're breaking out. We have a reason to break out. We got good earnings. I said, you know what? F it, man. Let's throw more money into it. And I'm glad I did. Now we're, you know, I don't think we ever look back to this price. I don't think we ever come back to this 1580. I'd be shocked if we ever did that. We might get, no, I would not count on that. I would not count on that. We might come back to this 1861, which actually we almost did. Let's just take a look at the price action here on the open. So we did, we came back, tried to test it, and we're already moving back up to $20. So if you feel like you missed it, you didn't, hit the subscribe button. I'm going to go more into depth. I want to keep going over these stocks, but I'll show you the chart. You still have, you know, according to my forecast, base case, like a 20% CAGR going forward at least, potentially a lot more if it goes up to a different GAN angle. So that's ZETA. Wonderful, wonderful, wonderful. Oh, and by the way, take a look at this. This is the rule of 40. Take a look at this top left corner here, ZETA, 47%. So it's an elite company. It's in the rule of 40, and it has just a tiny market cap. So much room to run, guys. Just really, yeah, I'm very bullish ZETA, if you can't tell. But look, look at Palantir. Unreal. Palantir, 94%. Palantir numbers are crazy. $1 billion in revenue, plus 48% year over year. They're guiding for 50% year over year. I'm not even going to get into all of these. We know Palantir is just an animal, but it's valued like it's like a Greek titan. It's not the valuation. And listen, famous last words: sell Palantir because the valuation is too high. I think that famous words, famous smart words might be, if you had not trimmed any of your Palantir and you bought it $7, what are you waiting for? What are you waiting for? Are you waiting for earnings to drop this name 25%? Because the day will happen. The day will come, probably. Maybe it won't, but I don't think that it's going to grow at these rates. I've been trimming my Palantir and feeding these other names that are unloved, like ZETA. You know, my Palantir chart, let's take a look at it. So we're trying to get over this GAN. This is my prediction, honestly. I think that you're going to get prices of 160 again. I don't think it's going to actually break through this. Yeah, I don't actually think it's going to close above this. If it does, great. I have a position still. I just don't. I think one day you're gonna be able to buy at this price again years from now. I do. I just don't see, like, this is the trajectory it's been on. It's been growing parabolically for years. It can't do that. Like, if it does that for 2 more years, it'll be the biggest company in the world or something. I mean, it's just the growth rate. Yeah, let's just take a look. Yeah, if it tripled its market cap, it would be a $1.5 trillion company. It would be as big as Tesla if it were to get up to like $600. But the valuation, it just doesn't make sense. But that's okay. That's fine. It's like a mid-carder. It's not a main eventer in my portfolio anymore. And if it does grow to that size, it becomes a main carder again. You know, no problem. But if it drops, I took my profits. It was a smart thing to do. I win either way. So this is how you manage a position. Okay. If you have never bought Palantir, if you are just now hearing about Palantir, is the move over? Probably not. But there's better risk rewards out there, in my opinion. Toast, crush earnings per share, beat their revenue. okay? But their stock's going down. Company reported revenue of $1.5 billion, surpassing analyst expectations, marking a 25% increase year over year. So that's what they're growing at. Adjusted earnings per share came in at 13 cents, missing the consensus estimate of 22 cents. But they raised their full year outlook, now projecting a non-GAAP gross profit from subscription services and financial technology solutions between 1.8 and some change billion and 1.8 and some change billion, reflecting anticipated growth of 28% to 29% year over year, up from their guidance of 25 to 27% year over year. So they beat revenue, they beat guidance, and according to this, they missed their EPS. But according to this, they missed their EPS. But according to TradingView, they beat. So I can't figure out if they beat EPS or if they missed EPS. This says they beat EPS by 18%. Is that right? Yeah, 805. But this says that they missed. This says that they missed. Did they miss? Did they beat? I don't know. All I know is that they increased their guidance. They increased their revenue. They're profitable. Like, fine. You know what I mean? Fine. You want to send toast down? I guess I know what's for breakfast. You know what I'm saying? It's already back down to its point of control here that it had been building a base on. So, okay, so now we're right here. Let's do a little, so I had the original assumption that we'd be making our way up to this, and I still think it's possible, but let's just say that you bought today and it just follows this. What do we have? 52 weeks, you still have a 12% gain over 12 months. Not my favorite, but I also don't think that that's how this is going to go down. So maybe I hold at this moment, and if the market wants to send this thing down, like if the market wants to send this thing down to, I like to be, a 33% gain. That'd be a 25. So yeah, I mean, if it sends it down to this GAN, then I'm buying. I might have to buy before that. We'll have to take another look at that. Make sure you hit subscribe, because I go over all my charts and kind of give you my thoughts on why I buy, where I buy, when I buy. But fundamentally, toast, I don't understand this reaction. So if they want to send toast down, especially right before rate cuts come around, it's a fintech. Come on, man. That toast is turning into a fat pitch. Okay, it is. Shopify, speaking of fat pitches, earnings per share beat of 245%? Excuse me? Excuse me? Yes, sir. I told you this thing is a fat pitch. I told you this thing was an absolute slam dunk layup. Look at this monster. Okay, I want you to see my GAN. See the symmetrical nature of price action to the GAN? Support, resistance, support, pop. Okay, now we are, I want you to look at this and then take a look at NVIDIA. Okay, because my NVIDIA chart looked exactly the same just a few weeks ago. It was in this the little triangle, right? And it's managed to, I only expect it to climb the GAN, or at least tap the GAN over time. And so at a minimum, I want to get like a certain CAGR if it does that. But like, yeah, when I bought this, all I expect is it to climb the GAN, but nope, it just said, wee. And I think Shopify is going to do the same thing. And that would make it break its all-time highs. So right now, would I buy it? That's tough. It's tough to buy it right now, because if I go 52 weeks out, and if it just comes back to this GAN, you're down 8%. Do I think it's going to do that? I really don't think it's going to do that. So, if I was short Shopify and I wanted to get involved, what would I do? Maybe I would use the Ichimoku indicator. Maybe I would use the Ichimoku indicator, and if, I would basically follow the trend And if it closed under the Tenkan-sen or something, I would get out and I'd get back in, but I'd have to follow that very closely, manage the position a lot. I don't like to do that. I like to do it when it's right here, and I can say, well, if it just climbs this GAN 52 weeks out, that puts me at, or where was it? When did I start buying? I think it was in here, or maybe it was right here. Yeah. Once it came down to this GAN angle, I said, like, well, okay. I mean, this thing's growing at a crazy rate. 52 weeks, 50%. So that would have been your margin of safety right there. But what a monster move. It's up, what is it up today? 20% today. Shopify. I called it out. Hit that subscribe button, you guys. If you're not following this, I was calling out Shopify right here. I said, okay, look how much it's been holding, holding up on this GAN. I mean, this GAN it's true. It is the truth. You're going to get your very rare once a year moments where you get to buy on this GAN line, and you have to take advantage. Now we're just flying. And I mean, you guys, it looks like it's heading to all-time highs right now. So now, yeah, that's all I'll say for now. Shopify, what a monster. Uber, okay, so these I don't have a ton to say about. Uber beat in their top and bottom line. Arista crushed their earnings, it looks like, beat by 8%, EPS revenue by 5%. Arista is one of those names that I want to get into, but just the charts never make sense. It's like trying to buy Palantir right now. It's just like, ugh. But if you have Arista, I wouldn't sell, I wouldn't be selling that. Lemonade absolutely smashed it. This one, I feel like I missed this one. I don't know. Someone convinced me in the comments why I should buy Lemonade. Maybe share a link to a video of someone talking about Lemonade. Oscar missed by 6%, EPS revenue by 2%. Not good, but we knew this was coming. So short sellers were expecting far worse quarter. Management didn't cut the guidance. The guidance is key. Guidance tells you what's going to happen. You can miss revenue, miss earnings, but if it's better than what was guided, the stock price can go up. So profitability is still expected in 2026. And then, so here's some other things. Oscar initial reaction, user base and cash are growing, 29% revenue growth year over year, which is great. 86 to 87 MLR for 2025, getting back to profitability in 2026. The rest is just noise, and I agree. By the way, if you're not following Ronnie V for Oscar content, you gotta, as an Oscar investor. He does it better than most people I see. All right, that's it. Now, let's talk about a couple things, because you probably haven't left a comment yet, so I have to ruffle some feathers. American Eagle. I am long the name. I am officially long the name. Now, I want to tell you why. And it's not too late to hop on this trade, by the way. I'm going to delete that, because we're long the name now. So this is a long-term view. You have this massive volume shelf, kind of like what I saw with ZETA. Massive volume shelf, and obviously, and then look at all of this volume that came in over the last 3 weeks. This is more volume. This is more volume. The last time volume was even this close was the COVID panic. There's never been this much interest in this stock as there is today, and we all know why, okay? We all know why. She's got great genes, all right? I think that's fair to say. And you also have, so here, I want to show you on the daily as well. So, it's one thing to say, like, okay, like when the Sydney Sweeney thing first happened and we had this big pop up, like, that might cool off. But then you have Trump come in and say, like, oh, I love his genes. Do you understand how many people voted for Trump? Do you understand how many people voted for Trump? Do you understand how many people that voted for Trump wear blue jeans? Do you understand how many people who voted for Trump wear blue jeans, would love the brand American Eagle, and find Sydney Sweeney attractive? Like, they could have an absolute monster earnings quarter. And that's what the market's telling you. That's what the market's telling you. There's a ton of volatility in this name. I have stop losses set, at 3 different levels, I think right here. So like you see these 2 bars right here, this is like the Sydney Sweeney pop, the Trump pop. If price action gets below that, I have a certain amount of shares I'm cutting loose. If it gets below this like $9 area, I'm cutting loose almost all my shares, because that would just undo everything. But I want you to take a look at this as well. Even if you didn't even know what was going on, this is pretty much the bottom of its range for most of its existence. So it's got an absolute ton of just volume there. So the technicals are screaming buy me. The fundamentals are, I think, going to scream buy me once the quarter is done. I really think this thing's going to 20 bucks. It might trade up into earnings, and earnings doesn't go till the end of the month. So yeah, I think I don't think it's too early. This is pretty much where I bought, and I was using volume weighted average price as well. So there you go. Do you think I'm stupid for buying American Eagle stock? Love Trump, hate Trump, doesn't matter. If you want to make money, this thing's like, it just seems pretty obvious to me. Okay, and then if that didn't piss you off, hopefully this will. I was doing a little research into Waymo, because everyone's like, oh, Waymo. Google, I invest in Google for Waymo. Waymo's so interesting. I don't think it's that interesting. I don't. And this is why. Waymo is guided to grow. I've seen all kinds of numbers, but it was like 80 to 125% CAGR for the near future. That's like pretty much all the information I could find. So I said, okay, let's say it doubles every year for 5 years. If it did, it would only bump Google's overall revenue growth by 0.1%. And I said, buying Google for Waymo is like buying a cake because you like one little blue sprinkle on it. Now, then I asked ChatGPT or Grok or whoever, okay, well, what if a similar growth occurs for Robotaxi? Robotaxi is a much larger piece of the pie for Tesla. It would grow their revenue by a lot. So drop in the bucket for Google, massive, expansion of revenues for Tesla. So Waymo could do 3 times as better as Tesla, and it would have and they both could take advantage of this total addressable market, and it would still make Tesla stock go up more. It would move the needle on Tesla stock more than Google, because Google's a behemoth. This is only a small, tiny fraction of how they make money. So you got to keep that in mind. I mean, you can think that Waymo's a better product, but it doesn't mean that Robotaxi is not going to be a thing. It doesn't mean that Tesla's not going to make money from Robotaxi. So leave a comment below if you agree or disagree with me. Tell me why I'm wrong. I'd love that. And if you like this content, hit the like button. Thank you so much. I'm going to say it one more time. Hit subscribe. Thank you. I'm trying to grow this channel. And yeah, thanks so much for watching. Catch you in the next one.